Saturday, March 3rd, 2018, Monaco 64, home of alternative economics and contrarian views. So the bankers, especially the central bankers, well, they're the same as the bankers. They're running scared of competition. And what do I mean by that? Well, cryptocurrencies. I know cryptocurrencies are very volatile in terms of fiat money, but they are an alternative to the debt-based fiat money system. And before I go further, I like to talk about the debt-based fiat money system and the real reason behind it. We've been in a debt fiat-based money system worldwide since 1971. You could argue since really after World War I as well, except for the US where they had a, how can I say, a commodity-based system until 1933. And amongst countries, it was like a gold exchange system where people had to, countries held dollars and those dollars were convertible into gold. So not even the other currencies were convertible into gold, so you had to go through the dollar. And it's not a system. A fiat money system is not a system based on free competition. And the other thing I like to say is that we don't need banks and debt to have a healthy economy. We don't need credit to have a healthy economy. The reason we need credit is to keep the fiat money system going because it's dependent on an ever expanding volume of loans, because the loans are money and the loans are not payable. They can't pay it off because it's based on thin air. And the only way to pay it off is to issue even more and more loan. And that's why they come out, like Hank Paulson came out during the financial crisis in Congress. He was the US Treasury Secretary, ex-CEO of Goldman Sachs. Kept saying, oh, we need to bail out the system because Americans need credit or else they can't buy their cars or their, they can't pay off, they can't go to university or whatever. And he made it seem like credit was something that was needed. But if you look at the free market and individuals money, what creates wealth is not money. Or credit, or banks. What creates wealth is human action, labor, human ideas, production, and what the market is a place where all the actors in the economy get together through intermediaries, of course, or peer-to-peer, as it can be done today, and exchange goods and services. Originally, it was direct exchange. If you could find something that you wanted and you could find someone that had something that you had that he wanted or she, that's how it was done. But through trial and error, through the free market, people, came up with an idea. Oh, this little metal here, this silver coin, everyone seems to want it. So let's use this as an instrument of exchange, of indirect exchange. We also found out that, this holds its value. Like 10 years from now, you could still use it to exchange for things that are valuable. Oh, it's easy to carry. I'll put it in my pocket. It's easy to divide pieces of 8. You had that, or you could have smaller coins. It's attractive, it's precious, it's rare, the supply isn't, but that's implied because it holds its value, right? And they also found out that these little things were really interesting, even for bigger transactions, these little discs of gold, or even conches, whatever. So that's what the economy is. And that's what creates wealth, is people exchanging their labor, be it farmers, be it industrialists, people providing services, entertainment, and the only thing that money does is facilitate the exchange. So when they come out and say that we need banks, we need credit, that's only because in the fiat money system, that's what they need. And the fiat money system is not a free market system. And so we've been under, you could say, not a free market system. We haven't been under capitalism for, since 1971, and you could argue since the beginning of the 1900s when the whole of Europe went off the gold standard for World War I. The biggest proof that the fiat money system is fraudulent and is, how can I say, not a free market system is the fact that they have to be, the fiat money system in every country has to be imposed by force. And what do I mean by force? Well, through legislative fiat. And the other thing they do to keep people poor, because in this system, you can't have, and I know that not 100% of the population, everyone can be rich. Their, human nature is the way it is. Some people will be more successful than others, but in a fiat money system, you really need to keep, the crowd or the public really poor and indebted. Why is that? Well, because if people start succeeding and being self-sufficient and having enough money to live independently, they won't need to borrow. So the banks go out of business, the fiat money system collapses. So what they do is they first of all legislate the fiat money system, which is by force. They ban any other kind of money or currency from circulating. And the other thing they do is that they impose taxes, income taxes. And you can see that when they created the Federal Reserve Act in 1913, they also reinstated the income tax in the US. And why do they do that? Well, because they don't want people to be getting too comfortable. The other thing they do here in the UK as well is the inheritance tax or the death tax. They don't want families, becoming independent, heirs. The only family I think that are not subject to the inheritance tax in the UK is the royal family, which is, I guess, fair, isn't it? So, but another proof that the Bank of England money is fraudulent is it's hidden right in plain sight, and very few people look at it. And I've done videos about this before. And the thing is, it's getting hidden a bit more now because of these new banknotes here. This is the 10-pound note. They're like kind of plastic notes, these new notes. And underneath here it says Bank of England. There's a statement there, and I'll read it to you. It says, I promise to pay the bearer on demand the sum of £10. Well, that used to be when we had a gold standard in the UK before World War I. You could go to any bank or the Bank of England. I'm not sure if you could go to the Bank of England, but you could go to other banks and you could, give this note, this promissory note, and they would pay you with 10 sovereigns, £10. So nowadays, I've called the Bank of England on the phone, and I've spoken to people there, and I said, how come you still got that promise there? And they tell me, oh, it's because you can bring this note and we'll give you a new one. And I said, so why don't you put that there? You can exchange this old notes for new ones. Why do you keep a promise to pay the bearer on demand the sum of £10? And I think I tweeted a few years ago, there's some Bank of England person on Twitter, and they told me that the £10 that they promised to pay you is in government debt, which is a promissory note. So basically, this is a promissory note that doesn't extinguish that, because they pay you with debt. So, you know, they're passing the parcel. You know, it's like musical chairs. Oh, you can have this note, but we won't pay you with anything. You know, if I did that in the real world, if I borrowed something from someone and I wrote him a note, I will pay you, you know, I will give you your, you know, let's say your set of golf clubs. So I borrow someone's set of golf clubs. I will give you a set of, you know, golf clubs in a month's time. If I came back in a month's time and said, oh, here, you can have that, I'll just write you another one, they would say, no, I want my clubs now. And that's what the Bank of England has done. But that promissory note is getting harder. Nobody really looks at it. They don't question it. I looked at it years ago, and that's one of the things that got me looking into this money matter. Well, and this is another one here. Another Bank of England promissory note, and it's from 1951. So very interesting. That's £5 then, promissory note. And it's had the same promise to pay the bearer on demand the sum of £5. Interesting that they don't say what it is. They can't say what it is because people would say, you know, what the hell? But yeah, and that's what they've done. So what's that got to do with Mark Carney and cryptocurrencies? Well, he came out this week, I think it was a couple of days ago, to talk about cryptocurrencies. There's an article here on Reuters. It says, cryptocurrencies failing as money, but technology has promise. Carney. Just to remind you, Mark Carney worked for Goldman Sachs, just like Hank Paulson. He's the governor of the Bank of England. And he says, cryptocurrencies such as Bitcoin are failing as a form of money and have shown clear signs of being a financial bubble. But their technology could improve the financial system in the future, Bank of England Governor Mark Carney said on Friday. I would agree that there is froth in cryptocurrencies, but you know, the only reason the Bank of England note, or what they call the pound, you know, works as a form of money is because it's imposed by force, legal tender laws through taxation, where they only accept Bank of England notes as a form of payment. So let's see, and it says here, Carney joined a chorus of concern among global policymakers over the rise of digital currencies, saying authorities needed to prevent their use by criminals and new rules were needed to treat them like other assets. So here you have an institution that issues fraudulent banknotes, saying that they need to prevent criminals from using cryptocurrencies. Well, criminals, I'm sorry, they use all kinds of currencies. It's not the currency or the money that creates criminals. That's a completely different subject. And I would note as well that it was, you know, the Bank of England, the UK Treasury, that made sure that HSBC and its directors were not put in jail when they were found out to be laundering money for Mexican drug lords. And I'll put a video above about this in the cards. It's called All the Plenaries Men. It's a great video, and it shows, I think even Mark Carney was involved at the time because he was head of the FSB, or he worked for the Bank for International Settlements. And of course, you know about that bank if you've seen my videos the last few weeks. That's the bank that's above the law. It says here, it says, Carney, who heads the global rule-making body, the Financial Stability Board, which is the Bank for International Settlements, which, you know, laundered Nazi loot during World War II, which, yeah, allowed Hitler to take the wealth of the countries that he invaded. That's the same organization. And it is the same organization that allowed and forced the U.S. Department of Justice not to prosecute HSBC, the FSB. expressed, and so it says here, Carney, who heads the global rulemaking body, FSB, expressed doubts about cryptocurrencies earlier this year. So there you have, you know, the pot calling the kettle black, so to speak. Central banking fiat money, they almost collapsed themselves in 2008, and they had to incur trillions and trillions of dollars of public debt to bail out banks and their fiat currencies. And now they're telling us that they are the people that you need to listen to, and that you need to stay out of cryptocurrencies. Am I saying everyone should go into cryptocurrencies? No, but you know, you need to do your own homework, study about money and like the history of money. You know, get gold and silver as well, physical. Also, one of the biggest reasons I think the central banks are concerned about cryptocurrencies or any competing currencies and the free market is that they've put themselves into a corner. I made a video a few days ago about Britain's Potemkin economy, and I showed how the Bank of England now owns 25% of UK debt, after, you know, owning very little about, you know, 10 years ago. And what's the only way that they can get rid of this debt? Because we know they're going to inflate the debt and it's going to become worthless. Well, it's to pass it on to you, to the public, to the unsuspecting public. And that's why Mr. Carney, Mr. Powell, Mr. Draghi, all the central bankers, ex-Goldman Sachs people, ex-Carlyle Group people, have to come out and tell the unsuspecting, trusting public to take on, you know, their crappy paper so they can buy things of value, and that so you can remain poor and indebted. You know, you can, so that you know, when you work and you earn their crappy fiat money, you don't get ahead. That's what they want. They want to perpetuate the system. Hopefully they will fail. More and more people will wake up. So yeah, so I recommend, you know, get involved if you can, if you don't have any debt, if you're earning extra fiat trash, get into precious metals. Buy a silver coin. Not that expensive, one of these. I guess these are more expensive, gold coins. But yeah, and you can see how they try to copy real money. This is a £1 coin, the new one. It's got a little bit of, it looks like gold on the edge and silver inside, but it's not real. It's not really gold and silver. And, you know, the 50p coins, they try to, you know, copy silver. But you just need to hold it and see the difference and the color. So it's just, they're imposters, fiat money. And fiat money is not free market. And we don't need banks and credit to have a well-functioning economy. We just need a free market. So there you go, Mark Carney. What can I say? So if you enjoyed this video, please like, share it far and wide so we can get people, you know, all around the world to learn about this. Follow me on steamitaswell.com and on Twitter. And I'll talk to you later, and have a good weekend. Bye.